Welcome back to the channel. My name is Brad. Today we're going to dig into AMZY from YieldMax. Full disclosure, I personally do not invest in single stocks, but that's my style. I know that my audience does, and these are the steps that I would personally take if I was going to invest in any stock or ETF that was based on a single stock. Without any further ado, let's dig into how I would go about looking at AMZY. AMZY has a yield of 29.31 at the time of the recording of this video. It is a covered call ETF by YieldMax. The fund does not invest directly into Amazon, but it's based off of Amazon through a synthetic call. These synthetic calls react just like the price of Amazon, or it's simulating the price of Amazon. One key note, if Amazon did pay dividends, you would not be entitled to any dividends. At the time of the recording, Amazon doesn't pay any dividends, so that's not a factor. How does YieldMax do this? They put a short put and a long call equaling a long stock position, and then they sell a short call for income. They hold treasuries as the collateral and for additional income. The results ends up being a cover call strategy with monthly potential. The short out of the money calls allows for some upside participation. All the options are cleared and settled by Options Clearing Corporation. There is no leverage used on these ETFs. Looking at their dividends since day one, their average dividend is 63, almost 64 cents. Looking at their 19A-1, these funds are not as tax efficient as other funds, meaning their return of capital is much lower than, let's say, an SPYI or a QQQI. Just keep that in mind if you're holding this in a taxable account, that these will actually be counting as net income that you'll have to report. Using Portfolio Visualizer, I went back to September of 2023 through this weekend, reinvested 100% of the distributions, and Portfolio Visualizer actually does this. So 2023, on a $50,000 investment, would have paid $5,074. So far this year, it's paid $14,320. Now, I did also run this since January of this year, and there's a $1,000 difference in compounding between starting in September of last year and starting of January 1st of this year. So that compounding effect going forward is only going to get bigger and bigger and bigger. Keep that in mind. Looking at annual returns, AMZY is really keeping up or close to keeping up to Amazon. Basically, the difference over there is they are getting caught out sometimes with their cover calls, but they're generating that revenue. And this does include reinvestment of distributions. I have a feeling if you hold this long enough, these distributions will catch up. And going forward, you'll actually start to outpace Amazon. This is a long play, not a short turn, I'm going to get my money this week. Looking at drawdowns, since September, there's been 3 drawdowns. Every time during these drawdowns, AMZY has done better than Amazon. To show this, when I look at Portfolio Visualizer, it shows how many months Amazon stays underwater compared to AMZY. And sometimes AMZY actually gets above water faster than actual Amazon. This is amazing that this call method, generating revenue, compounding on a monthly basis can outpace the actual underlying. To actually do AMZY true justice, you have to actually look at Amazon's financials. And looking at their financials, then you decide if you really want to go into AMZY. So let's look at their financials. As you can see, they missed back in 2021 their revenue and earnings, but that was before this ETF. Recently, and this is actually in the data, they missed revenue and earnings in the second quarter, only by a little bit, and it caused a dip in the price. Looking at actual earnings, they beat expectations every single quarter for the last 4 quarters. Their financial health over the years has been getting better. In 2024, their free cash flow is actually down. This probably can be contributed to the cost of goods going up and inflation. If you like this content, please give me a thumbs up, subscribe, and leave a comment below. One thing I always do when I look at buying an individual stock is actually look at price targets by analyst. These analysts do this for a full-time job. These aren't part-time analysts. These aren't YouTubers. These are professional analysts that get paid to do this every single day of their lives. 35 analysts rate this as going up over the next year. All the analysts says this is a strong buy, a buy, and no analyst says it's a hold, sell, or a strong sell. One other thing that I would do personally if I was looking to buy this ETF is actually buy it at a discount. This can be found on YieldMax's website, and I will leave a link down below. YieldMax publishes when they're actually above premium and below premium. This is buying it slightly above the net asset value, and sometimes you can buy this below net asset value. And I would look to do that. Matter of fact, when they announced the second quarter earnings, you can see that it dipped to 40 pips below. That's a nice dip for something that analysts are saying strong buy and buy. So let's break down how they do this with their cover call methodology. As you can see, they own treasuries, they have a put, they have a call, and then they sell the cover call. The cover call currently is sold at a strike price of $182.50. This is actually the same strike price that they used last week. With these calls, they're going to make 7.2 cents this week per share. Last week, they made 6.4 cents per share. Looking at a price chart, you can see when the earnings were announced in August, there was a huge dip, buying opportunity. Since then, the price has recovered. This week's call is in yellow. So as long as the price doesn't go above that yellow line, it's a full win. We do want the price to go up to the yellow line, but not past the yellow line. Currently, that call is written 3% out of the money this week. That is my fair and honest review of AMZY. I have a feeling that due to the compounding effect of reinvesting distributions, you have an actual honest chance of actually outpacing Amazon. No guarantees, but the numbers don't lie. Those distributions are going to make a big difference after a couple years. It's not a quick get rich, get out process. If you believe in Amazon, this may be an actual better bet of Amazon long term. Until next time, God bless.